Okay, so there's a lot going on in this question. First and foremost, we need to identify that the question is asking for something that is happening in the investing section of the statement of cash flows. So the first thing that should come to your mind when you think about the investing section is that this is going to represent the acquisition and the sale of non-current assets. Okay, so the acquisition price of this forklift is going to cost $30,000. Okay, however, when you think about the statement of cash flows, the question you need to ask yourself is how much cash is going out the door today? Okay, so while $30,000 is the eventual amount that is going to get paid, $3,000 is the amount that is going out the door today. Okay, so $3,000 is getting paid today, and the remaining $27,000 of the $30,000 is getting deferred as a future payment, right? Because if we read this question carefully, we see that they're going to pay $1,000 per month over the next 27 months, and that will represent that remaining $27,000. Okay, so that remaining $27,000 is going to be the remaining payment of the principal. Okay, so we're going to classify that as debt financing. So that would be classified on the financing section. Okay, so when you see this $1,000 per month over the course of 27 months, those payments would be out of the financing section, not the investing section. The $3,000 down payment is the cash going out the door today for this investment. That is going to be presented in the investing section. So therefore, the correct answer choice is going to be $3,000.
So in this question, we're focused on the operating section, and this is being prepared under the direct method. So let's go through and see which activity here would be recorded in the operating section. So how about the sale of property, plant, and equipment? Well, whether we're selling or buying property, plant, and equipment, that is going in the investing section and not the operating section, so that's incorrect. How about the payment of cash dividends to shareholders? So dividends are tricky. When we pay them to shareholders, that's a financing activity, right? You can see that in our visual. That's number 4 under equity financing. However, when we receive them from shareholders, that actually is a cash inflow. But again, this is payment of cash dividends to shareholders. So this is not going to be recorded in the operating section. That's going to the financing section. How about interest received from the issuance of notes payable? So the great thing about interest is whether it's paid or being received, it's always going to go in the operating section. So interest, operating, just remember that. That's likely going to be our correct answer here, but let's check on the last one. So the last one, issuance of common stock to shareholders. Well, that's a financing activity. You can see that when we issue common stock, that's number 1 in our visual. So that's going to be incorrect. Therefore, the only item that's going to the operating section is going to be interest received from the issuance of notes payable. And again, remember, anytime interest, you see it, think operating, whether it's being paid or received. Woo! This time we're at the Capitola Beach Club, and they need our help to figure out the net cash provided by operating activities using the indirect method. Now that's key, right? Because for the operating section, we could use either the direct or indirect method, and there are differences. So as we can see for the mental map of the indirect method, we always start with net income, and then in step 2, we add back non-cash items like depreciation, and then we also need to reverse out the impacts of any gains or losses, and then in step 3, we need to account for any changes in current assets and changes in current liabilities. So let's go through and figure out what the net cash provided by operating activities would be for the Capitola Beach Club. So let's start with step 1, and this is where we start with net income, and the question tells us it's $3,600,000. So that's our starting point here. And then in step 2, we're going to add back non-cash items and then reverse out any gains or losses. Now in this question, the only item for step 2 is depreciation, and we need to add back $2,200,000 for that. So now we can move on to step 3, and this is where we take into account the changes in current assets and current liabilities. So the first item here is an increase in accounts receivable. So how does an increase in accounts receivable impact cash flow? Well, for accounts receivable to increase, well, we would have to have sales on credit. And that means we're deferring the collection of cash, right? Because the customers are going to pay us back in the future. So when there's a net increase in accounts receivable, well, that technically results in a cash outflow when we're talking about from period to period. So that's going to be a negative $330,000 in our cash flow statement. But then we also have an increase in accounts payable, right? And this is basically just the opposite of accounts receivable, because when our accounts payable increases, that means we're deferring the payment of cash to our suppliers or vendors, which is a good thing. That means we have more cash on hand. So when accounts payable increases, well, that results in a net increase to cash as well, right? So that's going to be a positive $990,000. So now that we've categorized each item, we're ready to add it up and see what the net cash provided by operating activities is. And under the indirect method, that's going to be $6,460,000. So that's the correct answer.
What's going on? My name is Joey, and I'm the founder of Universal CPA Review. You're probably here because you're ready to pass the CPA exams once and for all so that you can advance in your career and move on with your life. Let me be the first to tell you that I've been there and I feel your pain. But I'm also here to tell you that the CPA exam doesn't have to feel like such a maze, and there is a path to a passing score. So what are you waiting for? Don't waste any more time. Commit to the process because it will pay off. In my opinion, I say let's knock out the CPA exams once and for all.
This is the type of question that you really need to focus on because it tests whether you understand where certain activities will ultimately be recorded in a company's cash flow statement, right? So we're focused on the financing section. So bring up the financing section visual, right? And you can see we're focused on items that are related to equity or debt financing, right? Well, when we look through the options, the only one that relates to the financing section, and it's actually under equity financing, is dividend payments to shareholders, right? And we'll get into dividends later on in FAR, but basically when we have common or preferred stockholders, right, they own part of the company. And if we have excess cash flows, the company will distribute cash to those shareholders as a form of compensation, right? Rather than the company holding on to the cash. But that is a form of equity financing, which is part of the financing section. And that would be a cash outflow, right? We're paying our shareholders cash. So the correct answer is payment of dividends to shareholders. When we look through the other three options, those are all going to be recorded in the operating section, right? So I brought up some additional visuals here that show other operating sections, some cash outflow items, right? Well, payment of interest to lenders. I know you want to put that under debt financing in the financing section, but interest, that is considered operating, right? And then same goes with basically taxes that are paid to the government. And then collection accounts receivable, right? That's just collection of cash from customers. That's also part of the operating section. It's a cash inflow, right? So again, make sure you understand how different activities would be classified in the statement of cash flows. Very important to get that right because you will see these on the exam. Boobaloo! It's our favorite company and we're going to give them one hell of a cash flow statement. Now, Boobaloo uses the direct method and we're focused on the operating section. Now, what we need to remember about the direct method and the indirect method is that they are different for the operating section, but there is no difference for the financing or investing section. So the first thing we're going to do is go through these four items listed in the question, figure out if they are in the operating section, and then whatever is included in the operating section, we're then going to go ahead and calculate the net cash provided or used in operating activities. So on the first one, received cash from customers of $25,000. So this is definitely going in the operating section. As we can see in our visual, right, for the cash inflow items related to the operating section, well, cash received from customers, that's number one. That's just really basic stuff. That's going to happen in the normal course of business from selling our products or services to customers. So that is going to be included in the operating section. So how about cash received from the sale of equipment? So unless the company's primary business activity is to buy and resell equipment, then it's going to go in the investing section because anything related to purchasing or selling fixed assets like property, plant, and equipment, that's going to be an investing activity, so that gets excluded from the operating section. How about interest paid to the bank on notes owed? So this one can be tricky, and it's key that we remember that any interest received or paid is going in the operating section. Now, I know a lot of you want to put that in the financing section because any notes payable or debt, that would be a financing activity, but any interest paid on those notes or that debt, that is going in the operating section. And as you can see in our visual, that's number 4, and that's a cash outflow. but definitely going in the operating section. And on the last item here, cash paid to employees. Well, cash paid to employees, that's just normal course of business, right? We have to pay our employees in order to keep the business running. So paying cash to employees is definitely going to be a cash outflow recorded in the operating section. And that is number 2 in our visual there. So that is going to be included in the operating section. So now that we've nailed down what exactly goes in the operating section, let's go ahead and calculate the net cash provided or used. So received cash from customers, that's definitely going in the operating section. That's a positive $25,000. And then we're going to reduce that amount for the interest paid to the bank for $3,000 and then cash paid to employees for $8,000. So our operating net cash inflow or net cash provided is going to be $14,000. So $14,000 is the correct answer.